Hey, good morning, everybody. This is Mike Bjork, providing you another daily market report for Thursday, June 3rd. And we got a bunch of news going on today, so let's go ahead and take a look, see what's going on here. We had the ADP report. It's not a big thing we kind of look at primarily because it's usually been off, but it kind of gives us an idea of what's going on out there. It came in at 55,000 new jobs in the private sector, where some of the economists out there were kind of projecting maybe 100,000. Initial jobless claims are still high, but they're at 453, so it's a little bit better than their estimate of 455. Then we had the productivity, which was revised lower, down to 2.8 for the first quarter, which they revised it down from 3.6. So slowdown on the productivity side, and that's not obviously the good news for economics. And then again, but that's not a huge factor when it comes to the stock market or the bond market. And another item they're looking at is ISM Services Index, and the actuals came in at 55.4. So basically, we kept the same from the prior month at 55.4. They thought maybe it might tick down a little bit lower, but that's also good news. And then U.S. factory orders were up 1.2%, but if you take out the transportation, it was actually a negative 0.5%. So not the greatest. The transportation, as we mentioned before, can create a lot of volatility and can really swing the numbers because you're talking, like a Boeing airplane or these type of things. So they're high in numbers. That brings up the sales. And then you get the retail sales that was up 2.5% with the discount stores really doing the most. But as I was kind of creating this, I noticed a big change in the market was developing. The traders are, the stock market was up a little bit. Now it's actually trading lower now, and then the bond market was actually showing some improvement. So what that is a result of is mostly concerns about the euro also declining now. And why are they concerned about the euro declining? Is that we could provide, basically our cost of goods becomes more expensive to our European counterparts. So therefore, manufacturing and everything else could slow down, and as well as jobs. So right now, the jobs thing is really the most important thing. They really want to see jobs. But most economists don't really project us going back to normal back until maybe 10 years. Lockhart made a comment. He's a Fed board member out of Atlanta, and he basically even said that even though unemployment is relatively high, we may have to still raise interest rates. So basically in the future, but that's something that, of course, we don't really want to hear. But it may be a sentiment among the Fed board members, so that that kind of raises some brows. So anyways, let's take a look, see where the bond market was. It actually started the day lower than where we left off yesterday, about 18 basis points. So as a result of that, basically our interest rates have probably gone up a little bit compared to what it was yesterday. But as I pointed here, it was about up 3 or 6 basis points for the day. But when I checked a little bit, it goes up 12.9 or 9 basis points. So it's kind of fluctuating between there. So we're probably closer rate in this range. So maybe a closer gap up a little bit. But it's as I showed you yesterday, we had kind of like a factor here raising here. So it's going to have to go one way or the other way. But with this little stem here, maybe it's kind of getting undecided. So which way to go? Tomorrow's going to be the real big day. I think it's going to kind of swing it to which way it's going to go. And that's going to basically be our job numbers we're looking at. So heavy news tomorrow will be the job numbers, and that could really make or break the bond market. All right, guys, have a great day.